Welcome to our new video. Today we're going to talk about one of the most important concepts in the financial and corporate world, public issue, which includes both IPO and FPO. We'll understand what they are, how they differ, and what are the eligibility conditions under the ICDR regulations. So stay with me till the end. Let's get started. Public issue, IPO and FPO. A public issue of specified securities by an issuer can be either in the form of initial public offering, IPO, or further public offering, FPO. An IPO is done by an unlisted issuer, while a FPO is done by a listed issuer. As per the ICDR regulations, the issuer shall comply with the following conditions before making an IPO of specified securities. The conditions need to be satisfied both at the time of filing the draft offer document, commonly referred to as the draft red herring prospectus, and at the time of registering or filing the final offer document, commonly referred to as the prospectus, with the Registrar of Companies. Eligibility requirements for an initial public offer. 1. The issuer has net tangible assets of at least 3 crores on a restated and consolidated basis in each of the preceding 3 full years of 12 months each, of which not more than 50% is held in monetary assets. However, if more than 50% of the net tangible assets are held in monetary assets, the issuer has utilized or made firm commitments to utilize such excess monetary assets in its business or project. This limit of 50% shall not apply in case of IPO is made entirely through an offer for sale. 2. The issuer has an average operating profit of at least 15 crores, calculated on a restated and consolidated basis during the 3 preceding years with operating profit in each of the 3 preceding years. 3. The issuer has a net worth of at least 1 crore in each of the preceding 3 full years, calculated on a restated and consolidated basis. 4. In case the issuer has changed its name within the last 1 year, at least 50% of the revenue calculated on a restated and consolidated basis for the preceding 1 full year has been earned by it from the activity indicated by the new name. For more detailed information, visit the official website of vmkprofessionals.vmkprus.com and always review the latest amendments before execution, as laws keep changing frequently. Offer for sale, OFS, is a financial mechanism where companies are allowed to divest shares in the stock market, providing investors an opportunity to buy shares directly from promoters of the company. Entities not eligible to make an initial public offer. 1. If the issuer, any of its promoters, promoter group, selling shareholders, are debarred from accessing the capital market by CB. 2. If any of the promoters or directors of the issuer is a promoter or a director of any other company which is debarred from accessing the capital market by CB. 3. If the issuer or any of its promoters or directors is a willful defaulter or a fraudulent borrower. 4. If any of the promoter or director of the issuer is a fugitive economic offender. 5. If there are any outstanding convertible securities or any other right which would entitle any person with any option to receive equity shares of the issuer, except outstanding options granted to the employees under an employee stock option scheme and fully paid up outstanding convertible securities which are required to be converted on or before the date of filing of the red herring prospectus or the prospectus. General conditions. An issuer making an initial public offer shall ensure that it has made an application to 1 or more stock exchanges to seek an in-principle approval for listing of its specified securities on such stock exchanges and has chosen one of them as the designated stock exchange. It has entered into an agreement with a depository for dematerialization of the specified securities already issued and/or proposed to be issued. All its specified securities held by the promoters are in dematerialized form prior to filing of the offer document. All its existing partly paid-up equity shares have either been fully paid up or have been forfeited. It has made firm arrangements of finance through verifiable means towards 75% of the stated means of finance for a specific project proposed to be funded from the issue proceeds, excluding the amount to be raised through the proposed public issue or through existing identifiable internal accruals. The amount for general corporate purposes, as mentioned in objects of the issue in the draft offer document, and the offer document shall not exceed 25% of the amount being raised by the issuer. the amount for general corporate purposes, and such objects where the issuer company has not identified acquisition or investment target, as mentioned in objects of the issue in the draft offer document and the offer document, shall not exceed 35% of the amount being raised by the issuer. However, the amount raised for such objects where the issuer company has not identified acquisition or investment target, as mentioned in objects of the issue in the draft offer document and the offer document, shall not exceed 25% of the amount being raised by the issuer. Further, such limits shall not apply if the proposed acquisition or strategic investment object has been identified and suitable specific disclosures about such acquisitions or investments are made in the draft offer document and the offer document at the time of filing of offer documents. Eligibility criteria for further public offer. 1. An issuer shall be eligible to make a FPO if it has not changed its name in the last 1-year period immediately preceding the date of filing the relevant offer document. 2. If an issuer has changed its name in the last 1-year period immediately preceding the date of filing the relevant offer document, such issuer shall make FPO if at least 50% of the revenue in the preceding 1 full year has been earned from the activity suggested by the new name. 3. If an issuer doesn't satisfy the above-mentioned conditions, it may make a FPO only if the issue is made through the book-building process and the issuer undertakes to allot at least 75% of the net offer to qualified institutional buyers and to refund full subscription money if it fails to make the said minimum allotment to qualified institutional buyers. For more detailed information, visit the official website of VMK Professionals, www.vmkpros.com, and always review the latest amendments before execution, as laws keep changing frequently. Entities not eligible to make a FPO. 1. If the issuer, any of its promoter group, or directors, selling shareholders are debarred from accessing the capital market by CB. 2. If any of the promoters or directoress of the issuer is a promoter or a director of any other company which is debarred from accessing the capital market by CB. 3. If the issuer or any of its promoters or directors is a willful defaulter or a fraudulent borrower. 4. If any of the promoters or directors of the issuer is a fugitive economic offender. So that's it for today's video. We hope you learned something new about public issues, IPOs, FPOs, and the eligibility requirements under the Companies Act and CB regulations. If you found this video helpful, please let us know your experience or any doubts in the comments section. And don't forget to like, share, and subscribe to our channel for more informative content like this. Thanks for watching. See you in the next video.